Good afternoon, everybody. Welcome to today's webinar. I'm just going to wait for probably 1 minute before we get going. I know there's a few more people still joining the webinar today, so we'll just give it 1 minute and then we'll get started. Okay, I think we'll get underway now. So thank you everybody for joining. I know we've got a lot of people on the webinar today. It's a pleasure to have you all on. It's been a while since I did a webinar, so it's really great to be back in the hot seat. I hope you're all keeping well. We've got a lot of people on the webinar from Hong Kong, Singapore, and Europe today. So thank you for joining. It's got a bit of a Euro 2020 feel. Obviously, it's 2021, the delayed Euros. We're going to be talking about England, Portugal, and Germany property markets. And there's going to be a chance for a Q&A at the end. So if you want to ask questions, feel free to use the Q&A setting at the bottom, and then we can pick up those questions at the end. But let's get into the presentation, and then we can go into the detail. Right, so there's a lot of people who have never heard of IP Global. So who are we? We are effectively a research-driven end-to-end property investment company. The key point of the business is the investment team. They are the guys who do all the research and due diligence and really bring the best opportunities. Just going back to our business model for those perhaps who don't know, we actually co-invest, we underwrite, so we commit capital, we bulk purchase to get some level of better pricing, and then we pass that better value on to our investors. The key point that really gives clients confidence is the fact that whatever we don't sell, by the time that project is completed, the building is built, we have to buy with our own capital. So when we tell clients we genuinely believe in opportunities, we genuinely do, because if the client doesn't buy, we have to buy at the end. So that's certainly gives clients confidence. Consequently, we don't do many projects. So we're extremely selective on what we do. We do a tremendous amount of research and due diligence before we launch any of these opportunities. Okay, so that's where we are. We've got 15 international cities where we have a presence. Here in Hong Kong is our head office. We're also present in Africa, rest of Asia, Middle East, and Europe. So very strong presence across the globe. So experience is key as a business. There are always property companies that are cropping up, but from IP Global standpoint, we've really come through the sort of thick and thin since we set up in 2005. And as a note, I've been in the business since 2006. So very much since those earliest days, we've learned a lot. We've come through the financial crisis. We've done markets, emerging markets, established markets, 18 countries overall that we've covered. And we've transacted on over $3 billion of property, and have also sold around about 5,500 properties across the globe. So a tremendous amount of property coverage there, and that can really give our clients confidence to go forward with their investments. So when a client does invest with us, we can assist in the whole buying process from end to end. So that goes from finding the mortgage for the client, lettings and management, and eventually we can also help the client sell that property too. We have our own mortgage brokerage, Liquid Expat, who can assist on the mortgaging side. Lettings and management is a key part of the investment journey. So if the client wants a tenant, we will manage that side for them too. And also one day we can help sell the property as well. And Complete Limited are the lettings and management guys and the resale. They are part of IP Global. So they have a vested interest to do the very best they can for the client, because if they do, then we know that there will be a chance a client will come back to reinvest through IP Global and buy another property. So there's a bit of the track record. So we've just done a snapshot of some of the key locations where we've invested in over the years. USA, Australia have been key markets. Right now, Germany is a current market for us, which I'll touch on. We've done quite a lot of projects over the years in Germany. We did our first one actually in 2014. We've done over 100 million euros of investment in Germany. UK is by far our biggest market. We've done over 1.7 billion pounds of transactions over that period. It's actually now over 100 projects in the UK. So we have very strong experience in the UK in terms of London, regional cities, and up in Scotland too. On the right-hand side there, just pulling out a few key facts. At the bottom, you'll see occupancy rates are extremely high. Over 95% across each of the markets, we have found tenants. Finding tenants, getting that yield for client is a critical part of the investment journey. And we've been very successful in doing that and have a super team based out of our markets to get the tenants for our investors. We also provide financial spreadsheets before the client does invest. And in terms of achieved rents, we are very successful in getting what we state on those cash flow documents, because we spend a lot of time getting the hardcore data at outset so that we can deliver on the numbers for our investors. And you'll also see there at the top a tremendous amount of units we have under management. So we have very strong lettings and management experience in a business under Complete Limited. Right, so we're just going to do a first poll now. I've actually put the countries up for Euro 2021, but actually I've narrowed it down to 10 now. Obviously we're into the last 16 phase, but I've put up 10 countries that I think have got a chance to win Euro 2020. Now, for anyone who's Welsh, don't feel offended. I've taken Wales out, but I've put here the top 10 countries that I think have got a chance of winning Euro 2020. So let's do the poll now, and let's see what people come up with here. So we'll just give people a little bit of time just to fill that out, and let's see what we end up with. Okay, Sylvia, let's end the poll there and let's see what comes up. Right, so we have a clear winner of England at 36%, then followed by Italy actually at 27%, and then Germany with 18%, and actually tied with France at 18%. So yeah, I mean, obviously there's a lot of England supporters on the webinar, I would imagine. Tough game v Germany next week, of course. I think Italy and France will certainly be up there. So yeah, interesting results. Right, so let's move on to the next slide. Okay, just bear with us a second. Just a slight technical hitch here. We're just I actually thought Denmark may have an outside chance as well with the momentum they're starting to build. So let's see how that all pans out. Right, okay. I think we're into the next part of the presentation now. So Portugal, we're going to start off just going through a quick review of the Portuguese property market. That's Cristiano Ronaldo just featured there. Obviously top goal scorer in the Euros so far. And actually top all-time goal scorer actually in the European Championships. So Portuguese economy, you know, what we've seen is a really strong start to the bounce back from the contraction of 7.6% last year. So 2021, we're looking at GDP growth of 3.3%, and then returning to pre-pandemic levels by the early part of 2022. That's mainly driven by private consumption, exports, and the vaccine rollout is starting to go very well actually in in Portugal, 10 million population. So it's expected that they will get through the whole of the population quite quickly. And certainly that bodes well for their growth in the coming months, and obviously going into 2022 when we expect them to make a full recovery. So let's move on to the next slide and look at the actual property market itself. Well, property market is really dominated by the two main cities of Lisbon and Porto. Porto is really coming up on the rails these days. It's a very strong technology hub. Porto University, science parks. There's a lot of highly skilled individuals in Porto. And actually, when you look at the average salaries of tech consultants in Porto, it's about 37,000 euros, which sits below Dublin at sort of 50 to 55,000 euros. So actually, with that lower cost of salaries, etc., and lower commercial costs, etc., it's why more and more companies are actually setting up in Portugal. And then obviously there is the advantage of English being widely spoken and superb infrastructure. So Lisbon and Porto are very much key cities. The point about Portugal as a whole is what we would say is it was very late to recover from the financial crisis. So actually it was only a couple of years before COVID it really started to rebound. So there is a lot of value there. And that is why we are continuing to focus in Portugal. We see interest rates of, believe it or not, below 1%, variable rates around about 0.7%, and yields of around about 5%. If we look at one of the other key drivers, I would say, in the property market is the Golden Visa scheme. So for those of you not aware of that, there is an opportunity to invest in Portugal to get the Portuguese passport. And in effect, what that means is you have to invest in a variety of ways into Portugal, job creation, property via funds, etc. And the Portuguese passport gives you access to not only Portugal, but the whole of the European Union. So there's a lot of capital flowing into lots of different assets to enable clients to secure passports, from student accommodation to commercial property, residential property. And this is really uplifting the whole of the country. So Golden Visa is a big driver actually for the growth of Portugal, the economy, and also the population, with more people taking up residency in Portugal. So let's move on to the next slide. So this is just really a snapshot of really, if you look at the right-hand side, just talking about the value of Portugal. I mean, we're talking about some of the key locations of the outsides of Porto and Lisbon. We're talking about 300 euros there or thereabouts per square foot. Now, that is extremely good value in today's world compared to other major European sort of top 10 cities, of which Lisbon is certainly one, and Porto as key cities. So in effect, there is very strong value there, and that is why we continue to focus there. The chart on the left shows you how, yes, transactions have come off, and yes, there was some pricing sort of movement, but now we see the graph starting to move upwards and property prices starting to move upwards. And there is very strong confidence in Portugal, no question about that. We see that from our investors, very, very keen to get into the Portuguese market. It has great legal structure, you buy as freehold, and as I shared, there is really good mortgaging opportunities, good yields, and as I say, we're working with some really good developers in these locations. Right, let's go on to England. So there's a picture of Harry Kane, currently at Tottenham, but if you read the reports, potentially on his way to Manchester City next. So we'll have to see what happens there, and hopefully he'll start firing in some goals for England quite soon when we play Germany next Tuesday night. So let's get into the presentation. I mean, it's kind of a similar feel to sort of Portugal, but on a much grander scale. I mean, I think the point is, with the UK economy, the vaccine rollout has gone so well, probably unexpectedly well, that is really one of the key driving factors. Even though numbers have been going up in the UK recently, the sheer number of people that are vaccinated is hopefully going to help the UK sort of ride through this and these economy and all the numbers starting to continue to grow. There was 1 million people actually just last weekend who signed up for the vaccine, as they've now rolled it out to all ages. So vaccine rollout is going very well, and this is really leading to confidence in the UK market. We've also seen at the end of last year, of course, the Brexit deal, and we're also seeing the fact that that is driving a lot of capital, a lot of trade deals, etc. And so again, by the start of next year, we believe we'll see the UK economy at pre-COVID levels, so quite a rapid return. This is going to cause some inflationary pressure, but the Bank of England has signalled that interest rates will not rise until around about 2023. So that gives investors a solid platform of around about 2 years before they can expect rises. And therefore, that will drive a lot of certainly interest in property market, as we have been seeing already this year. Allied to that, lots of consumption growth. People have put off a lot of spending over the last 12 months, but people have been sitting at home in many respects, furloughed, not spending any money. But now confidence is returning. People are spending money, and that's really getting the wheels of the economy in the UK going again. So how does that affect the property market? So if we go on to the next slide, no one really would have predicted that the market would have risen sort of 7% last year. And the government has done a pretty good job in terms of securing and stabilizing the UK property market. There's been a lot of investment in terms of providing that level of confidence. The government provided a stamp duty holiday, which has subsequently then been extended, which will end on the 30th of September this year. So that's given people initial confidence to invest and save money on their stamp duty. Of course, we're all familiar with people perhaps moving out of London, but that's only part of the story. There's lots of investment going in across regional cities in the UK because affordability is very, very good. And also the government is underpinning the property market with, for example, a new Help to Buy scheme. So helping first-time buyers, providing interest-free loans of between 20 and 40%, depending on the city, and enabling those first-time buyers to get on the ladder. And first-time buyers typically underpin the property market. So there is a lot of activity we're seeing in the property market right now. Of course, interest rates are at record low in the UK. And then you talk about that people have put off buying over the last few years. Developers have put off building. And there really is a perfect storm for property investors right now. Indeed, I was reading an article that said, I think Barratt Homes have built sort of 5,000 less homes in the last year, because this is all from delays from COVID, putting off transactions during the Brexit uncertainty, etc. And we can magnify that over a number of developers, etc. So less stock in the market, more interest, lots of pent-up demand, low interest rates, stamp duty holiday, lots of positives in the UK market. And we've clearly seen that as a business, and we clearly see these opportunities going forward for quite some time. Right, so I've just put this graph up. I mean, this is something we saw via Savills in terms of UK outlook across the regions. I think this is tremendously conservative, to be honest. Very sort of sunny spells across the UK and all the different regions. And on the right there, we're highlighting what rental growth we see. I think personally, from a London perspective, I think once you see people traveling again, I think sort of from international cities, I think you'll see the London market start to pick up quite strongly later this year. And I also think once, as I say, the UK is pretty much fully vaccinated, people will start to return to the office, albeit there will be some sort of hybrid, but that will really get the London economy going again. I mean, it's quite an interesting fact that London has some of the highest unemployment across the UK now, and that's really because of all the ancillary businesses attached to those who are no longer working in the city, the hospitality sector, etc., which has been so badly hit. But I think once people start returning to the offices, the unemployment will come down, and I do think as travel opens up, you'll see the London market strongly picking up again. But regional UK, I definitely think has a bright outlook, and of course there's lots of regeneration going in across the major UK cities with HS2 and lots of high-level planning that has been in the making for quite a number of years now, which is really just coming to the fore right now. So let's move on to the next slide. So Germany, obviously the big game next Tuesday night, Germany v England at Wembley. Hopefully it doesn't go to penalties again, because we know what normally happens there. But hopefully England can get a convincing win on the night. That's a picture of course, Tino Werner, who plays for Chelsea. So if we get into the detail on the next slide. So German economy. So fundamentally, German economy is an export-led economy. Of course, with the recovery of China initially, and of course the way the US is strongly rebounding, this is very positive for Germany because of the amount of exports that country does. Indeed, around 50% of German annual GDP is exports to other countries. So it's extremely reliant on exports, and obviously major markets in China and the US, but also they have been remodeling their economy over the last 18 months. There's a lot of focus on the tech side, on the new industry side, and Germany is very much the heartbeat of Europe, and also has a very strong sort of open door policy to migration, which is very different to many countries these days, really part of their constitution. And of course, that healthy inward migration is ultimately positive for the economy and ultimately positive for the property market as well. Interestingly, unemployment has only risen just slightly over the past year or so to April 2021. And as we see the German economy rebound, we expect that to quickly go back to pre-crisis level and Germany move on very strongly indeed. So let's take a quick look at the German property market. I mean, if we look at many different charts, we see Germany as being strong and stable. It's a very strong and stable market. Typically, it's a market with very low debt levels, and that is very positive in terms of good affordability, good sustained affordability. We've seen asking rents in the larger cities in Germany steadily rising year on year. So Germany does fit well as part of a strong investment portfolio. In terms of the residential market, again, as I say, because of relatively low debt levels compared to other economies, we see sort of low rental default rates. So it certainly provides confidence to investors. And we know that, given that we've done a lot of projects over the years in Germany, and we know that our investors receive their rents on time without any issues. Nationwide house prices have risen by 3.23% during the last quarter, so that's a very strong set of figures there. And in terms of, interestingly, among the 7 so-called A cities, Berlin continues to have the lowest rents as we go forward. That should actually say 2021. Now, I think it's very interesting with Berlin. I mean, it's quite a unique market from a historical context. Prices have kind of lagged behind all the way through from the Berlin Wall coming down, the unification, etc., etc. So it's not just a domestic city like many others in Germany, Stuttgart, Frankfurt, Munich, etc. It's a truly international, global city. You know that if you go there. English is widely spoken. And also the fact that, we've now got the new international airport that's finally opened up last year. And that's really going to put Berlin, the capital, back into the spotlight, where you'll be able to fly directly from here in Hong Kong and all the Asian cities direct for the very first time. So quite exciting future for Berlin, we firmly believe. And again, in the capital city there, there's very strong undersupply, lots of population growth. Again, COVID is really delaying new projects coming to market because town planners are not meeting as much. And we know that it's actually quite tough to bring new projects to market, which again is positive in many respects because there is a lot of interest in the capital, in Berlin. But as I say, there is less and less stock currently coming to market, and we see that actually happening for the next couple of years until people go back to the offices and projects start to get signed off again. But one of the other big things, if we talk about Berlin, that is so positive this year is the recent Berlin rent cap that was removed. Now, the German government challenged the local government in Berlin to say that the rent cap was unconstitutional. There have been long-term rent controls across Germany to protect individuals, but the local government in Berlin took it upon themselves to introduce some new measures. The central government challenged those, and they were recently removed. So one of the things that was always in people's minds who doubted Berlin was, what about these rent controls? They've been removed, and that's starting to drive a lot of capital into Berlin and really creating Berlin as a free market economy. So lots of positives for the capital city there. I think the other city that we're keeping an eye on and will continue to invest in is Leipzig. Leipzig is, for those of you who don't know, it's relatively close to Berlin. Again, it's the old East Germany. Think about the north of England many years ago, tired and underinvested. Well, Leipzig would kind of be a similar kind of case, but now with that old Eastern European, East German infrastructure of great railway network, great airport, cargo, etc. Lots of German companies are starting to increase headcount there. They've got an amazing sort of 20-year plan. You've got the likes of Porsche and BMW, etc., building electric cars in the growth sectors, and Amazon and Siemens, etc. And it's actually DHL's European hub for cargo. 6,000 employees work there. So that's definitely a city that we are also focusing on too very strongly this year. So again, in terms of house prices, it's very much, if you look at over the years, yes, prices have ebbed and flowed, but now we start to see more on an upward trajectory across the whole of Germany. And if you look at the sort of real prices there, just on that upward tick, the blue tick, as moving upwards. And I think the point we'd make about Germany is to say it is a strong and steady market. Great legal structure. It's freehold property. You can lock in 10-year fixed rates from 1.5%. You hold the asset for 10 years. There's no capital gains tax. It really does a great job for the investor. And also, occupancy rates, again, in that market are very, very strong. So clients can invest with the knowledge that they will certainly get tenants very, very quickly. So I just thought I'd put this up today, actually. This is a piece of work that we recently did for our Berlin projects that we've been investing in since 2014. We did this in association with some data from CBRE. And this really lists the type of returns that we've been seeing across our projects. It's a really good sort of broad collect of projects across the northeast and southwest of the city, and reflecting some of the growth numbers that we have achieved for our investors. So often we sort of look at projecting forward, but it's actually good to reflect on what we've achieved so far. And I think the point we'd make is, I think the next 10 years for Berlin, it's very much seeing the city go from a sort of up and coming sort of growth city to a mature international global city. And as I say, with the amount of investment we see going in, there was indeed around about sort of 3 billion euros of capital going into the tech side in the last 6 months of last year, with a new international airport, with the likes of the Tesla Gigafactory opening up in July, and all the science parks and all the research establishments being set up, etc. We see a really strong growth story for for Berlin over the next 5 to 10 years. So we still see it as very much in its infancy as a market. So I just want to highlight a few of our projects just before we go to questions. So feel free to get those questions ready if you wish to ask them. And actually, we've got one more poll that we'll be doing as well. So in terms of Berlin, I mean, this project here, super project, it's with a developer we've worked with before in Berlin, Adam Real Estate. We had a previous project that's completed and is a couple of years into the making now. This is in Mitte, the capital of the capital, if you like. It's very close to the embassy district. Places such as Potsdamer Platz, Alexanderplatz, Mediaspree, these are all the big employment hubs I'm mentioning here. And you know, these small units are super popular with young professionals, and we're talking about pricing from sort of 240,000 euros with 70% financing and 1.5% interest rate. So, you know, this is an example of how we see the capital being out of kilter with many other of the European counterparts, and also sort of, for example, Paris and London and those sort of cities. So this is a great example of current work in Berlin. And then if we just switch over to the next opportunity I'll showcase, something slightly different. This project, the Boathouse, is in the location of Treptow-Köpenick. It's about a 30-minute journey outside of the capital, so it's commuter belt. It's a really nice location. It's waterside. It's perfect for those who are doing the hybrid of perhaps working from home, commuting into the office. This is a very nice sort of middle class area with great amenities. And we managed to secure a really good deal here with the developer, 26 units, and managed to secure a discount of about sort of 17% from the developers' units. So really attractive location. This is one of the areas that is targeted for growth in the new world, where people are looking for space, etc., and families. So great project completing in around about 18 months from now. And again, we can get those very low interest rates of 1.5% for 10 years. So just switching markets now. This project here, Literal Living, when we was planning this deal, I managed to get to the location in Portugal. Really great project in Porto. If I think about UK, I think about this as being somewhere like Brighton in the UK, up and coming, trendy. It's an area where young professionals, so those working in, for example, the tech sector, you know, would absolutely be living in. 15 minutes from the centre of Porto. There's metro stations nearby, and it's just a 6-minute walk to that beautiful beach on the bottom there. But keeping this as an unemotional investment, again, you can lock in 30-year fixed rates at 1.7%, 5% plus yields, and actually 50 of these units were sold locally, and we got 16 for our investors. So it's really great to see that local buying. And the fact that we could only get 16 for our investors, it really shows that there is demand locally, and at just over 300 euros a square foot, we believe that there will be strong growth here in the years ahead. So finally, let's come over to England. So Birmingham is a key focus for us. We have Eastern Green in Digbeth, which is on the south side of the city. We're also planning some new work in Birmingham. We see Birmingham as where Manchester was around about 5 years ago, where we started investing there. So when you figure that it's going to be sort of 40 minutes from London with the HS2, the high-speed rail link being built, and you're buying at sort of 380 a square foot, we just think that's sort of tremendous value. And I have to say, when I was in Birmingham sort of 2 years ago now, I was really blown away by the growth and the change and all the regeneration going on there. Very, very different to what I remember from a number of years before that, when I was last in Birmingham. lots of regeneration, lots of big corporates like HSBC and Deutsche big corporates like HSBC and Deutsche Bank, etc., moving in, trendy bars and restaurants coming up, and really making it an attractive place to live. So we've also highlighted there how the pricing stacks up to some of the other projects that we've looked at. So really super value there. And this is a great one for clients who just want to lock in with relatively small deposits now, and then with the balance on completion in 2 years' time. And finally, I just want to finish off with a couple of projects in London and outer London. So some of you may not have heard of High Wycombe. It's basically commuter belt London, just off the M25. It's a town where there isn't that much apartment style housing. It's where the kids leave home. It's a nice area to live in, so they want to stay there. So getting apartments is quite difficult. But when you figure here everything that's going on with new shopping centre, Buckinghamshire University, Heathrow Airport nearby, Reading and all the tech jobs that are being created there, and the fact that you can get to London in sort of 30 to 40 minutes, when you're buying a one-bedroom unit from £216,000 with a 5% yield, I think this is a really attractive opportunity. We underwrote this last year, so we know there's good value in this project already. And also, bearing in mind it completes mid-August, it enables clients to take advantage of the stamp duty holiday as well. So this is one that is well worth taking a look at. And finally, we'll go on to the last project in London, the Solarium. This is on the west side of London, so just sort of carrying on the football theme. This is in Brentford. Brentford just returned to the top flight of football after so many years in the doldrums, and lots of regeneration actually that's been going on in this particular part of London. So, you know, think about Chiswick, think about Kew, think about Ealing, think about Acton. You know, this is the next place that's we see as growth opportunity. It's not far from Chiswick, it's not far from Kew Bridge, just a 7-minute walk. And with this sort of pricing that we're getting on these really nice sort of small units from £370,000 with just under a 5% yield, overlooking Gunnersbury Park with workstations and gym and all sorts of facilities, a rental guarantee and free furniture pack. You know, this is definitely a good opportunity, again, with a developer we've worked with before, and full confidence. And indeed, this project is completed. So again, it enables clients to get their money in quickly and take advantage of the stamp duty opportunity. All right, so that's just about it. Just before we go to questions, there's a second poll. We're interested just to see from that review, so talking about England, Portugal and Germany property markets, what markets would you most likely to be investing in right now? So let's start the poll, Sylvia, and let's see what sort of results we get. Just about to launch that poll now, so let's see what we get. We'll just give that a few more seconds as people finish up, and then we'll have a look at the results. Okay, let's end it there. So if we look at the results, clear winner England. Hopefully that's the same in the final of Euro 2020. The fact, yeah, I mean, I think, you know, people are sort of really buying into the story of obviously record low interest rates on the ground, stamp duty holiday, pent up demand, yields, regeneration, all the stuff that we've talked about today. And then closely followed in second place by Portugal. Again, obviously we talked about those strong yields and the fact of the super low interest rates, variable rates from sort of 0.7%. And then closely followed by Germany in third place with 18%. But we mustn't rule out Germany in terms of from a footballing sense and also from an investment sense. Holding for 10 years, no capital gains tax, and again, you're locking in interest rates of 1.5% for 10 years. So that definitely makes it an attractive market. But yeah, any of these markets where you've seen these details today, then if you want further information, feel free to drop me a line, and we will be able to provide that information for you. Right. Okay. So we've come to the end now. So let's go to questions, and we've had a number of questions actually that have come in. So let me just have a glance at some of those. Okay. So someone has asked about typical mortgage rates across these markets. Obviously, we've covered that pretty much, but I think maybe I'll touch on loan to values. So loan to values, typically we can look at 70% mortgaging in Germany, 70% in Portugal, and 70% in England typically. So loan to value is pretty good across each of those markets. What else can we see here? Let's have a look at this. John in Singapore says, what are the potential risks of investing? So I think typically, yeah, very good question. Developer defaulting, project not being built. These are some of the things you need to be aware of. I think just coming back to the business model, because we're investing our own capital, we really go to the nth degree with our research and due diligence to make sure we are dealing with high quality developers. You can never take all the risk out, but you can downsize your risk. And I think by testimony that we've done over 100 projects in, for example, the UK now, and we've transacted on over $3 billion of property investment, that really does show that our business model does work, and that we do the very best we can to protect our investors. Okay, tax benefits. Well, yeah, we shared some of the information there. I think if you, rather than sort of going into a sort of a detailed response in terms of tax, if anyone does require information on tax, we have investor guides. We make it clear we're not tax experts, but we can provide investor guides to provide some pointers for investing into each of these property markets, the relevant taxes you need to consider, and also we can provide financial spreadsheets and all the relevant information. Okay, so let's see what other questions we have. There is a lot of questions that have come in. How much are you able to finance a property in the UK? Okay, so we mentioned there 70% financing typically. And if clients do want to discuss individual mortgaging opportunities, feel free to drop a line and we can connect with Liquid Expat, our mortgage brokerage there. In terms of resales, someone has asked about can we do resales in the UK? Yes, absolutely. We have a big team in the UK. And so if you have property in the UK, yeah, we can assist in that process. We can introduce to our team and they can make an assessment and market that property for investors. It can be IP Global property or actually non-IP Global property, and they can provide the necessary valuations there. So that's something that they can do. Okay, I think that's pretty much it. I mean, there's a number of other questions, but I like to keep these to around about sort of 45 minutes. So I think at that point, I'll just sort of wrap up. I think, first off, I do hope that has been interesting and insightful for you in terms of how we see England, Portugal, and Germany property markets at this moment. And clearly we see confidence returning now. And as a business, we've seen that this year, a very, very different outlook to last year. If you do require further information, feel free to drop a line and I can provide that information. Happy to assist. And in terms of the poll, from a personal perspective, I hope England do win the Euro Championships. Let's hope. Tough game for Germany. But actually looking at the draw after that, I think the next round is Sweden, or Ukraine, and then it looks to be quite an easier path to the final. So let's see what happens by the end of the Euros. But from me here in Hong Kong, thank you again for joining. Thanks for your time today, and look forward to speaking to you all again soon. Thank you very much indeed for joining. Thank you.